demographics are deflationary and inflationary, depending where you are in the demographic cycle.
Okay, this whole idea of demographics as destiny is really interesting. Here's a question that I've never thought of before. Would we run into a problem if you could? So one, let's put a finger on debasement. Debasement is the government creates money out of nowhere. And so they literally just make it up. So if we were back in the days of printing, you would just turn the printer on. That's why they call it printing money, though now it's just a database entry. But if we were back in the printer days, you would print more. Would we run into a problem if we couldn't create more money because more people are being born, the population is going up? If money, like I think about this sometimes with Bitcoin.
That's what a depression is. A depression is when there's not enough money for the demands.
Like literal money.
So what happens is the opposite of the debasement. Assets get devalued and currency, which is the thing that's in scarce supply, but the money is the thing that everybody desperately needs. When that is extreme, that's a depression. What we're seeing now is the opposite. So we've got inflation, but they've reduced liquidity to try and cool the demand.
But God, is it my ignorance that's telling me that the central banks may not be the worst thing ever? Oh, I know how people that know more than me are going to have a seizure. But I can't help but think, given that this is a game of psychology, given how easy it is to sort of nudge humans in a direction, that they could clamp down on their money, be too paranoid to spend it, and that it isn't necessarily a bad thing that we do have this tool to nudge it. Now, conspiracies, the Beast from Jekyll Island, like, I understand all of it. And so it's like, it's all sort of bad, but on balance, I come down on, I don't know, the system seems reasonably functional. How crazy does that sound from your far more knowledgeable perspective?
So there's a few things. First, velocity of money is, as you say, but it's a demographic phenomenon. So velocity of money has been super low since 2000.
So not influenced by the Fed?
No.
Interesting. Whoa, okay, shocking. You're smacking my worldview around.
They have not been able to.
Interesting.
Because may give us more wealth per GDP. So it'll manifest itself in ways that we don't know. Now, it doesn't matter if it's stuck, right? Because as long as it's in a pension fund that's investing in VC, that's driving technology, it's okay. I mean, the worst thing to happen is for you spend it on bags of chips and cans of drink, because then you're creating food inflation. What you actually want is it to create GDP growth. So by pension funds lending it or giving it, investing in companies, VC companies, you're fueling new technology, new wealth, new GDP.
Okay, so that brings me back to velocity of capital, people putting funds into the market. If you could snap your fingers and make central banks go away, would you?
Probably not. I'm kind of like you. I'm actually quite centrist in most things. I can see the absurdities of everything. But given the basket of stuff, I asked many people who were like, I hate the Fed. I'm like, okay, 2008, what would you have done? Well, I wouldn't have got there in the first place. I'm like, okay, but they did. And how do you get there in the first place? Well, and we could have had a clearing event and the leverage wouldn't build up. That's what's happening in crypto, right? The leverage can't build up. It just cannot do it because it keeps getting blown out. Why? Because there's no counterpart. But look at how vicious the cycles are. So do you want the whole economy to go through the crypto cycle? Well, you can do that. That's not having a central bank. There's so many trade-offs as you suggest. So I think for a generalized population, you would trade smoothness and some level, acceptable level of debasement or inflation, whatever you're looking at, some acceptable level versus an economy that does stuff with myself and my colleague Julian Bittle from secular themes, short-term themes. Doesn't mean I'm not wrong as well. I can clearly be wrong, but I just think it's in the price. And the worst part of it is is the stock market's going to be going up probably. It won't rocket up at first, but eventually it'll pick up while we're all feeling the pain.
Because people are looking forward. And so they're saying, okay, the bottom's in, now's the time to get in. We know we're going to go up from here. So even though we're still sort of going through it, people are losing their jobs, but wise investors are like, you just need to project this out into the future.
Yeah, so there's a time horizon of how the business cycle works. Currently, the thing that leads it the most is the Chinese credit cycle. Who knew? But it is right now 17 months ahead. So when it turned up 17 months ago, we're starting to say, okay, there's something happening here. It also forecasts the recession. And then you've got other forward-looking indicators about 9 months out. We've got a bunch of indicators. But the last thing in the stack is rents. And the one before that is wages. So wages are going up right this now, but they take a while and then they start coming down again. They won't deflate. Nobody's going to really come. And I'm actually telling people to do exactly that because it's the rational thing to do. What you do, if you're going to panic early. And I'm not talking about the stock market going down either. I think we've had that. It went down. The NASDAQ went down 38%. That's pretty much bang in line with a regular bear market. But what I'm saying is in your personal life, where it really matters, where the rubber hits the road, is panic early. Just look at your expenditure, look at your cost, look at your business. So what do I need to do here just to make sure that I can just get through a pretty shitty year? But 2024, probably pretty decent.
So what is the natural cycle of things? Why do people begin to warm back up? And what are the threats, if any, that you see looming? So housing, I'm hearing housing bubble bursting, problem
Doom
there.
porn. Doom porn.
Is that it? It's just people are overreacting, not real.
The housing market is expensive. Interest rates have gone up. So people are going to buy less houses. Yes. Will house prices come down the road above GDP growth? So if GDP grows at 2% and debt growth grows at 4%, everything above is only for financing interest payments since 2009, since the recession. And so that, all of that money is the exact same amount as the size of the Fed balance sheet. So they are issuing bonds to pay the interest. That's paying your credit card with another credit card, and then giving it to your dad and say, well, you settle the bill.
Whoa.
Which is the Fed. So I think they completely know what's going on. And I haven't really shared this with anybody yet. I also think it's global and it's understood. And it's all smoke and mirrors, that we never saw what the game was. And I think I've proven it, that this is all the central banks did. This is what quantitative easing. And step back is what am I talking about in this scrambled nonsense that I'm saying? The US, for easy maths, long-term trend rate of growth is 1.75%, but let's call it 2%. Interest rates have been average around 2%, let's say, for easy maths.